Good evening, everybody. Still here for Wednesday, November 20th, 2013's daily market pulse. So we had down day again today. So markets were kind of flopping around for most of the morning. They were upside, downside, then back up in green for the longest time, eventually just fading. Finishing in the red, we've been talking about how the markets likely are heading further south. They could anyway. VIX likely to pop a little bit. The VIX was down. The markets were up early in the day, and as the day progressed, they just everything reversed. But everything was in low volume once again. So down in lower volume, more profit taking, nothing earth shattering. Distribution days remain the same. We did have the S&P closing below the 8 moving average at this point. So it's joined the Nasdaq at this point. The Dow Jones is pretty much sitting right on it, or has at least tagged it. The TSX very close as well. So let's take a look at some of the charts then. Okay, so the Dow Jones on the screen, we talked about this as well. The channelets are going up. We saw a couple of spinning top doji formations here at the top. It's always profit taking at a minimum. Depends on volume as well. We've talked about it's low volume. When you see that, you know there's profit taking. So you're best to start exiting. Taking profits, taking some money off the table, and looking for a possible full exit. And so it might not have been such a bad idea. You had at least a day, if not 2 days worth of study here to say, you know what, let's just kind of taper off here, and sure enough, it closed lower. It finished all the way to tagging. It finished as the day went on. It tagged the 8 moving average on the low of the day. It did bounce a little bit, but there's still some possible downside room. Still, it's possible. But the 8 moving average was the first place to consider. After that, the possible bearish engulfing high near 15.8 is another possibility as well. It's another 134 points lower. It's possible. Possible. Anything's possible. So that trend continues still up, because you can see there's still higher highs and higher lows. The S&P, we said, would tag the 8, possibly coming down to the change of polarity at around 1775, which was the high, the bearish engulfing all the way across that red line, which would closely coincide with the rising 20-day moving average, which is essentially what's happening. The stochastic is now coming out of the overbought area. And you have kind of a spinning top. It's essentially an upper and lower shadow on either side of a reasonably square type of real body. So it's kind of like that. It's kind of an indecisive trading day. Went higher, as you can see, near the yesterday's highs, and then came all the way back down, making a new low. So a fair amount of movement, but again, as stated, lower volume. So we're looking at that area right there still as your kind of a target area, support, and then below that, if it breaks below, then you're looking at the lows in here at around 1745. So the Nasdaq, we already knew was already rolling over. It had already been kind of in a decline, bearish engulfing the other day on Monday, continued yesterday. Gapped up on the open today, that would still finish with a lower high and a lower low today compared to yesterday. So 3 consecutive newer lows, 2 consecutive lower highs, I guess you can say. So still, the target would still be more downside potential. Look at the stochastics here; it's almost in the oversold state. So it's not. You can't say it doesn't have too much further to go, because you never know. But you'd be looking at a support area. There's a window that comes right across this area right here. Come on now, where's my? There we go. There we go, right here. So you see, there's a window there. And that held as support before, so I'd be still kind of expecting that to be the case here as well. That would be the likely area. Lower Bollinger Band is there, that support is there, the rising 50 is in close proximity, so all that should act as reasonable support with a likely of a bounce. So look for that. And the TSX is still struggling at the upper Bollinger Band. It had a shooting star yesterday coming off that flat Bollinger Band. Came all the way back into that change of polarity area today, including the 20-day moving average, right around the 13,400 region. A little bit of a bounce, lower shadow is there, coming off the 20 and so on. So it's still undecided. It's lower volume, as I said before. It looks like almost like a flag-like formation, so we're still looking for a break above the shooting star. Right now, that's the support area that you're looking for to hold. If not, you're looking for lower, which would be the blue line below that horizontal blue line where the lower Bollinger Band happens to be in the lows of the bullish engulfing and the bullish piercing. So look for a drop into that area as a possibility as well. But ultimately, you're looking for a bounce. You're looking for a move above the shooting star from yesterday, if that's even at all possible. US dollar, Canadian dollar. After a nice bounce on a Morningstar formation yesterday, a little bit of a stagger, a little bit of a pause and stall here, with the ultimate move it's still into 105 and possibly higher. So the trends are still up. The 8's still rising. The 20's still rising. Support here at 104 is still holding. So for now, there's more bullishness here than anything else, but you still have that resistance across 105 to contend with. Treasuries were, a little weird. They broke down and broke down hard. So you can see the bearish engulfing, and then it just reversed. And look at the size of that candle today. Huge. Breaking the 131 level into the 130 area now. So it's breaking support levels and making new lows, with room to go lower still. So a head and shoulders formation, however, here. Interesting. It's not, your head and shoulders are typically topping formations. This has not really necessarily been going, making new highs and going gangbusters to the upside. So I don't know if I really want to call it a head and shoulders formation per se, but if this continues lower from here, this has got a lot of room down to 128. So we'll see if treasuries actually do that or not. Gold was up, at least for the beginning of the day, early on, not very much though, and then got a gap higher and then eventually faded pretty hard. Look at the bounce with that lower shadow once again, still tagging the area of the doji that were formed mid-October. Currently forming a little bit of a green candle on a gap lower in the open following the close of the markets for about 45 minutes. Oil probably is worth looking at as well. Okay, so we've got oil here still literally sideways, chopping back and forth between the 93 and 94 area. Not quite 95, but almost 95 as well. But all the highs are kind of coming down. This is looking a little eerie that this could just fall apart because it's just not getting quite enough juice to go higher. But you're seeing spinning tops, doji. So something's coming. Something is coming, and what that will be is hard to say. But you still think that oil should be higher, but hey, whatever. So the bottom line is, all these little doji coming across here is just telling you something is brewing. It's pent up energy, and it's there's going to be something that's going to blow here, either to the upside or to the downside. So just be prepared. You can almost put a buy stop above and a sell stop below, and you'll win probably no matter what, it seems like. So let's move on. Small caps we typically look at just because of the risk on factor. This is likely going to be a red candle. It gapped higher in the open and faded again, so it's still the possibility of a 50-day moving average down into the 107 area, 107.50 area. All those are possibilities. That still remains. Looking for still a breakout on the upside into the 112 on a momentum for the bulls to stay alive. IYT, you got the bearish engulfing, which confirmed yesterday right into the 8 moving average and the change of polarity. It did sink through that, forming a new low into the 20-day moving average. So you're looking for kind of like this area here probably as it's fast approaching oversold perhaps. Let's take a quick look maybe at a Fibonacci on this one. And you're seeing that you're at 50%. So this is very, very much, if it's going to do something, you'd think this would be the spot it would be looking for a bounce. It could flush lower and then eventually close back above the 50-day moving average. I'm sorry, the 50% retracement, as well as the 20-day moving average. So it could certainly do that. It could flush aggressively and then come right back up again. It's where the closing price will ultimately be. Retail is next, and let's take a look at that. So that's the same thing up there, kind of almost like a hanging man, not quite by definition because the lower shadow doesn't, of course, fit the criteria. But we ended up with a continuation, 4 consecutive red candles, back to the change of polarity right at $60, that beautiful round number. 20-day moving average is fast approaching. So here as well, you might be thinking and considering a place for a possible bounce. Let's once again look at a fib here to here, and you're right into 50% here as well. So this is all seemingly coinciding here reasonably well. It'll all get interesting as we look at the VIX here momentarily. Semiconductors will be worth looking as well because it looks a lot like the NASDAQ. So it has slipped through the 50 into the lower Bollinger Band. That's the first time it has slipped through the 50-day moving average in quite some time, all the way back since August. So It's looking for support now. At this point, you got a fair amount across here, particularly where this window is. This is maybe the target for it right here. That's the possibility right there, right at that, just below $40. With $40 being a round number with a quick flush to that downside window and then maybe a bounce, that's kind of what you'd be looking for. 3 consecutive down days, you might be looking for a fourth or fifth, and you'd be looking for a bounce at some point in the very, very near future, naturally. And as we look at the VIX to close out the indexes and the sectors and so on, there is the little bit of a pop, spinning top above the 20-day moving average, and I said this could probably go into the 1450 to maybe 14 to 1450 area. It came very close to that today, and it's, as I said, on some of these indexes, you're still looking for a possible quick flush lower, which would give us the VIX maybe a pop up before it fades, and then the markets reverse. That's kind of what I'd be looking for between now and maybe Friday, but probably tomorrow, Thursday, you'd think. But we'll see. We'll see how it goes. All right, that concludes at least the recap here on this Wednesday, November 20th.